Well guys, just in the past couple hours, good old Uber stock went ahead and reported some earnings, and we're going to talk about these earnings that Uber just came out with in depth here. We're going to look at all the numbers and I'm going to give you my opinion on these earnings. Now, in terms of the stock price, it did close out after hours up, and it was up a little over 5.5% as far as after hours trading went, a little over a $2 move there. So, you know, usually you can assume whatever happens in the after hours market, generally speaking, that's kind of what transpires as far as the next trading day. So we should assume that Uber stock will be up tomorrow. The question is kind of like how much it will be up, and it is definitely possible it could reverse and it could go negative, but you know, just judging off of what happened in after hours, it should be a positive day for Uber on these earnings. Okay, obviously you guys know this is a very important position for me. It is a very important position for me. I have a very big position in Uber stock. Okay, I have 1,535 shares in the public account, which everybody in my private stock group can see every single move I make in that account. And yeah, it's like a $56 or almost $57,000 I have in that particular account. We're doing pretty well on it so far. Cost base on that one is $28.65. And then one of my private accounts, I have another 1,480 shares, so making a total of over 3,000 shares total. And on that account, we have a $28.96 cost basis there. So needless to say, Uber is a very big position. We are buying the stock very heavily. October, November, December, we were loading up on shares, and I'm definitely very happy I got a big position built. And when I started buying the stock, it was controversial, man. A lot of people are like, well, I don't get it. What are you doing here? Like Uber, I don't know. I heard they'd lose money, and there's just a controversial stock overall. And it didn't help when you heard like videos like this went nearly viral in the financial community. When you're talking about this video gets 193,000 views, you know, in a very short amount of time, that's pretty much viral in the financial community. A video like this that Mark Cuban, you know, was quoted as saying, Uber's not a growth company, which is just complete disinformation out there. But when you hear things like that, it causes the general public and a lot of investors to not even want to look into the stock, because they just hear something like, oh, that's not even a growth company, and oh, I heard they lose a ton of money. I don't even want to get anywhere near that, and they leave negative comments. And a lot of people have not even really looked into this business model and not even really looked into like what's going to transpire over the next several years with this stock. So I saw something that a lot of people didn't see, and I'm definitely starting to get some of the rewards for that, and I should over the next few years. So we're going to talk about these earnings really in depth. Just to let you guys know real quick here, link down there in the pinned comment in the comment section is going to be for the Valentine's Day sale we're going to have for Becoming Master Stock Market course that goes into everything I look for in a stock. So we're going to do a special Valentine's sale for you guys that have been looking to get in that course. I don't think we've done a sale on that course since probably Black Friday. So for a lot of you guys that are looking to get that course, definitely go ahead and sign up on that email list. We'll shoot you an email as soon as the deal drops Valentine's Day. All right. Alrighty, guys, let's start going through all these numbers in regards to Uber. So I always like to start out looking at the top line and looking at the bottom line for whatever company I'm looking into, and then we look further in depth from there. Okay. So in terms of Uber, they lost as far as a loss per share of 64 cents versus 68 cents was expected by analysts. So a slight beat. They lost, I guess, less money, I guess you can say, than what analysts had expected. Okay, so that's definitely, you know, a positive start there. And in terms of revenue, they had the slightest little beat in terms of revenue versus what analysts were expecting. So Uber did $4.07 billion of revenue in this latest quarter versus $4.06 billion was expected by analysts out there. So just looking at those, you know, just the basic numbers there, the top line, bottom line, you know, slight beats there, definitely nothing there that made me say, oh my gosh, this is a huge beat by Uber or anything like that. Just very slight beats by Uber, okay? Now, let's start digging into some more of these numbers in depth here, and we can start getting a good understanding of what's actually going on in Uber's business model, what's transpiring there, okay? So monthly active platform consumers, a very important number to pay attention to. So as of the quarter ending December 31st, this latest quarter, okay, they now have 111 million monthly active platform consumers, okay? That is a very important number. That's a 22% jump year over year. In terms of trips, the trips number is up 28% year over year. So people are not just, you know, not just about more and more people using Uber and their different products and services, but also people are taking more and more trips on Uber. Look at that number, up 28% year over year. Gross bookings for the company up 28% year over year. Very strong growth. And if you look on a constant currency basis, which I have that circled there, even probably a better metric to look at because you can judge growth better. Whether you had some headwind to currency or a currency that had a tailwind behind it, I think it's important to always look at the change in constant currency. But that number was really up 30% on a constant currency basis. Like a 30% number is very nice, okay? As far as GAAP revenue, that was up 37% year over year. That's a huge increase in GAAP revenue, okay? Keep in mind that's a 39% increase if currency was the same, okay? Unbelievable number there. As far as adjusted net revenue, up 41% year over year. And on a constant currency basis, that is up 43%. So in terms of Uber, this is definitely a fast growing company. And anybody that wants to say, Uber is not a growth company, they just haven't looked at the facts. They just haven't looked at the numbers. People could say, well, this is a company that loses money. Fair game. And they could say, well, we don't believe in it long term. If you want to do that, that's fine. But you cannot certainly call Uber, not a growth company, because this company is growing very, very fast, like 30-40% type growth rates, okay? Very strong growth there, okay? Now, when we get down the bottom line, we see some good things and we see some bad things, okay? So as far as the GAAP net loss attributable to Uber Technologies Incorporated, that was a 24% worse number than the same exact quarter last year, okay? So that is bad. That's definitely a bad sign there. On the good side is the rides adjusted EBITDA. Check out rides adjusted EBITDA. That is up 281% year over year, from 195 million rides adjusted EBITDA in the same quarter last year to 742 million in this latest quarter. What does that mean? That essentially means the rides business is getting very, very profitable for Uber. And if you're looking at the next few years, this business is going to really start pulling in the profits. It's in the bottom line for the rides business, like you take a ride somewhere in an Uber car, that business is now very profitable and will continue to get more and more profitable. The growth rates there are amazing. And in terms of competition, is very limited now because it's so hard to compete with these guys because they have this massive scale and these massive brands. So it's not like you can just create an app now and be like, oh, I want to be the next Uber. It just doesn't work like that anymore. So that's really, really exciting number to see there, okay? Also, the other good number to see is also adjusted EBITDA. That was a 25% increase year over year. So although the business is still, obviously hemorrhaging a lot of money, still losing a lot of money on the bottom line, we do see some positive things, obviously with the rides like we talked about, and just, they're losing less money than they were before, okay? Now, in terms of trips were up 32% year over year, okay? A very strong number there. Gross bookings grew 31% year over year from a little under $50 billion, and this is looking at the full year 2019, by the way, versus a full year 2018, versus $65 billion in gross bookings they did in 2019. Very shortly, Uber should be a business that has $100 billion plus in gross bookings. I can definitely see that probably within the next 2 or 3 years on a full year basis, okay? GAAP revenue was up 26% year over year, and on a constant currency basis, it's actually up 28% year over year. So very, very strong numbers there. I want to go ahead and look at the second to last line item. I have it circled there in blue, okay? That's the rides adjusted EBITDA on a yearly basis. So from 1.5 billion in 2018 to a little over 2 billion in this most recent year, close to 2.1 billion. That's a 34% increase there. And those numbers have gotten even stronger more recently as the year went on. So if you're thinking about the rides business, it's getting literally quarter by quarter, it's getting to a better and better place. And why is this? It's because there's so much pressure on all these ride sharing companies to get profitable and get their businesses in a good place. And it's not about fighting that market share battle. Now it is all about who can make money. Is that ride a profitable ride you just gave there or not? Not let's see if we can get 63% market share versus 58% market share. Like, that game is over now. The market share battles are over. Now it's all about profitability per ride, and that's increasing dramatically for Uber, okay? Now, these are probably the most important, this might be the most important slide I'm going to show you here in my personal opinion. This is what I really like to look at as an investor, is this particular slide here, okay? This shows shows you the gross booking breakdown for each of the business segments and how much that business is growing or not growing, okay? So and once again, this is just looking at the 3 months now. We're just looking at the latest quarter, okay? Gross bookings from the rides business changed 18% positive, okay? 18% growth in the rides business. That is 20% growth on a constant currency basis. Very strong growth still for rides, which is, their established, business there. Still very strong growth. But then we go ahead and look at the eats business and freights business and the other bets businesses, and that's where things get really exciting, okay? So the eats business grew 71% in terms of gross bookings year over year, 73% on a constant currency basis. And so although Uber Eats is losing them money right now on the bottom line, the fact is this is a super fast growing business for Uber. This is a big business. We're talking about gross bookings in this latest quarter of almost $4.4 billion. It's a huge business. It's growing super fast. So if you're Uber, you can understand why Uber wants to, continue to lose money in this business for the next year or two, because the opportunity in Uber Eats is just as big, if not bigger, than the ride-sharing business part of their business. So this is huge. This is a huge thing for Uber Eats over time. And when you hear Dara talk, and Dara, the CEO of the company, says things like, when somebody asks him, what's your Amazon Web Services? He says the rides businesses, but what also is going to come right behind it in a couple of years? Uber Eats, okay? That's why you just look at the numbers, guys. It's unbelievable, okay? Now, the freight business, this is something no one pays attention to when it comes to Uber, and I think it's because it's a small part of their business right now, but it's very fast growing, and Uber is definitely going to be a big player in freight over the long term, in my personal opinion. And so you look at the freight business, they just grew 74% year over year, okay? And that's 75% on a constant currency basis. So the freight business is just a sleeping darling out there that no one's looking at, and just wait to see where that business goes over the next 5 to 10 years, okay? The other bets category, the numbers are so small in other bets that no one pays attention to that category either, right? Because you look at the rides business, it's massive, the eats business is massive, so freight and other bets, no one even looks at those numbers right now because they're so minuscule compared to those big dog numbers. But let's just keep in mind the other bets category, it's just 9x year over year. So don't be surprised if that other bets category grows quite substantially, let's put it that way, over the next 5 to 10 years. It's just a lurker out there, okay? And once again, total gross bookings year over year, 28% positive change, 30% on a constant currency basis. Very strong numbers there, okay? Now, this next slide, definitely one of the most important slides I'll also show you. Although my favorite slide was actually the last one, but this one's really important, okay? So once again, the rides business, we just talked about it, a couple slides ago, 281% growth year over year, okay? And that's when it comes to EBITDA, because what we're looking at now is the latest 3 months ended year over year, okay? And we're looking at the segment adjusted EBITDA. So once again, $742 million for rides. That will continue to increase quite dramatically over the next few years, and that should be a business that, has adjusted EBITDA each and every quarter of $1 billion plus very soon, okay? Now, the Eats business pulls their entire company down right now in the short term when it comes to, EBITDA, profitability, net income, whatever you want to call it, okay? They just lost $461 million in the Eats business, and that's on an adjusted EBITDA basis. $461 million, that's ugly, that's bad, that's, any way you want to switch it, it's bad. But once again, the rides business lost a lot of money for a long time. It really did. This used to be the rides business was super unprofitable for Uber in the past. It didn't get to a, adjusted EBITDA positive place till very recently, and obviously now it's starting to increase dramatically. And so when you look at the Eats business, the opportunity is so big there long term. It's worth, especially when you're Uber and you got, at least probably $10 to $15 billion sitting around in cash on your balance sheet, plus investments in other companies that are worth $10, $20 billion. It's worth it for you to continue to invest in this business, lose money, grow this into a massive business that long term will be a cash cow for you, a profit machine, which the Eats business will turn out to be that. It's just going to take a little longer time, okay? It's not like it's happening tomorrow, okay? But needless to say, that hurt their business very bad, and when it comes to, obviously, EBITDA, okay? The freight business lost them $55 million as far as a negative adjusted EBITDA EBITDA for the freight business. That's another huge growing business. We talked about that one. It's growing like 75% year over year, so huge opportunity there. Other bets lost them about $67 million of adjusted EBITDA. Expect losses to continue for other bets for a long time to go in the future. And they also had $130 million of negative adjusted EBITDA when it came to the ATG and other technology programs they have going on there, okay? So when you look at it, you see, it's clear as day as far as if you're worried about Uber making money over the next year or two, it's clear as day. They're going to make a lot of money from the ride segment. Eats business will get there over time. It's going to take at least another year or two to kind of get to maybe like a break-even level. And then from there, you can start to see some very nice growth, just like the rides business did over time as, the competitive landscape lessens. This year was kind of a peak year in terms of the competitive landscape. 2020, things will lighten up a bit. 2021, 2022, things will get more fun, okay? Now, on this side, what we're looking at is the GAAP revenue by geographical region, because you want to be in a company, obviously, if someone like myself that's an investor, I want to see a company that's not just growing in one region or something like that. I want them to grow around the world. So if we look at Uber, they just, posted GAAP revenue in the United States and Canada that was up 41% year over year. So the US and Canada is growing actually faster than any of their other markets. That's unbelievable, okay? Latin America, 31% growth year over year. Europe, Middle East, and Africa, that's 27% growth year over year. In Asia Pacific, that is 34% growth year over year. So if you're looking at Uber, this is not just a one-trick pony in terms of it's just growing in one market. This is a company that is growing market by market all around the world right now. And also in some of the big markets like, say, China, Russia, some of those huge markets, right? Uber sometimes doesn't necessarily compete directly there, but they actually have big ownership stakes in some of the biggest players in those markets, all right? Now, I think there's also something very important to pay attention to, and I think it's this slide right here, okay? This is basically, they're kind of talking about some operating highlights from the fourth quarter of 2019. They're talking about platform here. Global brand strength drove 2019 download leadership in two key segments. Most downloaded app globally in both rideshare, which is the Uber app, and food delivery, which is the Uber Eats category, both in the Apple App Store and Google Play. That's exactly what you want to see if you're Uber. Not just that your business is doing phenomenal as far as the revenue and all those sorts of things, but also the fact that you have an extremely strong brand and you're the leader when it comes to the most downloaded apps in the two main categories that you compete in. That is phenomenal, phenomenal news, obviously, for Uber there. That means basically people have these apps on their phone, and if they're likely to get a ride somewhere, they're going to go through the Uber app, and if they're going to order food somewhere, they're likely going to do it through Uber Eats. That is great news. I would worry if other companies were beating them out when it comes to that, but obviously Uber is the leader there, and I love to see that, okay? Few other things to pay attention to that I thought were very important here, okay? The Eats subscription continues expansion. So Dara talked about, subscription is going to become a bigger and bigger part of the company over the long term, okay? So Eats subscriptions rolled out to all US cities, excluding California, and to Taiwan and South Africa, our first international markets to launch this product. And I'm really excited to see, what happens with that Eats subscription product over time and how many people sign up for that. And, maybe it's like an Amazon Prime, but for, food delivery. I think that's going to be really, really interesting, okay? And I think there's going to be, I think it's brilliant, okay? Freight continued to expand its offering to carriers. In-app bundles, which allow carriers to book multiple loads at once, have reduced empty miles versus non-Uber freight matched bundles. We have also launched a web portal geared toward trucking fleets in late Q3, with web-based carriers scaling to an average of 10% of overall supply in Q4. I love the way Uber is very focused on innovating in these spaces, and Uber just moves a lot faster than pretty much anybody they're competing with, generally speaking. Like the old freight brokers and whatnot, they're just not moving at this type of speed that Uber is. So that's why Uber will likely pass up all those guys, because Uber just moves much, much quicker, and they just end up making a lot better product than anybody they're competing with because they move a lot faster, okay? Jump, okay? Jump, which is basically their scooters business, their electric bikes business and whatnot. Jump launched new markets and won permits in key cities, launched scooters in San Francisco, bikes in Rome, and scooters in Sao Paulo. Jump also won permits to expand in key markets such as Washington, D.C., and 4 markets across Australia, Australia and New Zealand, which complement the Uber platform. In Washington, D.C., our permit win will make us the largest combined dockless fleet operator in the city across bikes and scooters. And, this is just Uber moving very fast, accomplishing a lot. And the company continues to execute on a very, very high level in these huge growth categories overall. And I just love to see it, okay? Now, there was some very exciting news that came out, okay? Now, this was, if you're asking me what was actually really exciting to me, a lot of these numbers I kind of, expected. There's nothing crazy there, but this was exciting, okay? Uber sees profit by the end of 2020. Dar is talking about achieving a measure of profitability in the fourth quarter of 2020 on an adjusted EBITDA basis. That's really, really exciting because I haven't even thought about any kinds of profits of any kind until at least 2021 with this one, and really starting to get into nice profits in 2022, 2023. I think that's when the profits will really start rolling in. But in terms of any type of, whether it's adjusted EBITDA or any type of metric as far as profitability, I haven't expected any of that till 2021. So the fact that now they're talking about fourth quarter of 2020, this is really exciting because this means, basically Dar is looking at the business and the executive team over there at Uber, and they're like, we're going to get to profitability actually much sooner than we expected in Wall Street, because Wall Street didn't expect any type of profitability at all until 2022 or 2023. And when you're talking about you'll at least, on an adjusted EBITDA basis get there in the fourth quarter of 2020, like that sets you up for 2021 as being possibly on the bottom line being a profitable year, which means 2022 and 2023 could be extremely profitable years, okay? So in terms of my thoughts overall, there are two things that kind of come to mind. One, this was a solid earnings. Once again, really nothing too much that blew me out of the water that I was like, oh my gosh, that's amazing, other than obviously what I just covered there, that very last part, okay? I would give it a 6 out of 10. If I was grading this earnings on a 10 being the best earnings possible, like, Tesla came out with a 10 out of 10 earnings on their last earnings, I would grade this one about a 6 out of 10. And the second thing is, 2019 was the year of peak losses for Uber, and 2021 and past are going to get very, very fun. This company has already had their peak loss year. That was 2019. If we're going to look at whatever they lose from money in 2020, it's going to be a minuscule amount compared to what they lost in 2019. And if I'm thinking about 2021, I'm actually starting to think 2021 could actually be a profitable year for Uber. And before I didn't think that. I thought maybe 2022. And I don't mean like extremely profitable for Uber. I don't mean they were going to make like billions of dollars on the bottom line. But when I kind of look at this, if the company is going to have an adjusted EBITDA positive in the fourth quarter of 2020, then I can see potentially them eking out a small net income, maybe a small net income positive in 2021 with the lead up to 2022, 2023 being huge profits. And that's when things really start to get fun, and that's going to attract a lot of investors when the company switches from this is a huge money loser to now we're break even, now we're making big profits. And when you see those type of things happen, generally Wall Street gets very, very excited very, very fast. We've seen it with some stocks out there before, guys. So hope you enjoyed today's video. As always, smash the thumbs up button if you enjoyed me kind of breaking this down for you guys here on YouTube. Don't forget about that pinned comment down there. That's for the Become Master Stock Market Valentine's Day sale. We're going to have a huge sale. Hope you guys enjoy that. And leave me a comment on what is your opinion on Uber stock and these earnings here. I'd love to hear from you guys as always. Thank you for watching and have a great day.